Market insights as timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The Opening Playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm. Try to trade without emotion involved in your decisions. Go at your own pace. Don't try to keep up with us or other traders. And ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy-to-understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now, this button is shown in 2 places, and I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues, such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategies sharp like the razor blade. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategies sharp like a razor blade. This is where the big plays are made. Oh. Step by step they break it down. No confusion. Informational spinning around with every trade. They set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Well, good morning, everyone. Welcome to the opening playbook for Tuesday, March 24th, 2026. Hope everyone is having a good morning so far. We will get started with our regular show momentarily. We should have Graham and Nathan here with us. Oh, hello, Nate.
Hello, hello. How's everyone
All right.
doing?
All right, just getting started here. Little gap down this morning, huh?
Yeah, I think this is so far totally within line of what we would think for today. Um, but at the same time, I think it's close to the danger point. So right now, what's crazy is just that, like we talked about yesterday, kind of the new normal of the volatility and the movement in the stock market right now. It kind of reminds me of tariff time when we used to get on here an opening playbook or a show and just say, oh yeah, another 1.5% move today, and it's kind of became no big deal. And so I think we're kind of in that environment right now. We're actually we touched down 2% from yesterday's highs, so our 1.9% from yesterday's highs in just the next session. So again, I think that's kind of the new normal here. I have a couple things I'm messing around with for fun that I'll let you guys know if I stumble on anything here. But I'm just kind of making up ways to see if I can take advantage of the volatility with some different trade structures. One of them I did today was I did a typical iron condor, which for those of you who don't know, that's where you kind of squeeze price into a box. And you say, hey, it has to finish, in the case of SPY, below 653 or above 650, which is a relatively tight range for where SPY has actually been going lately. And my thought there is that I can just get so much more premium right now for a small move than I could under regular circumstances. So my risk reward is like over 4-1 on that trade. But the market has been crossing back and forth a lot. Like the intraday volatility is extremely high. So I'm just very curious. Okay, I put on that trade at 4-1. I'm not going to actually try to pin it between those two prices. I'm just going to put a target on for 50% ROI and see if it crosses back and forth between those prices later in the day and can hit a target like that. So I'm just kind of messing around here, honestly, trying to figure out, are there some cool ways to take advantage of the high volatility and just how much range we have right now in the market. I really like the trade that we put on yesterday because it's 2.5% below the lows, and we can still get a 30% ROI on that. I think that kind of defensive trading makes sense. I think you could do the exact same thing to the upside if you're more bearish, which I'm kind of neutral bearish, I suppose. But anyway, for me, this is really just looking at the volatility. As far as the overall market, I mean, I don't think there's anything foundationally that we can point to that's really changing. Energy is, up almost regardless right now, and will be until something shifts on supply and demand or some headline makes it appear that it's going to shift. And pretty much everything else is just flowing in and out with liquidity. When there's optimism for any reason, headline or otherwise, pretty much everything is up. And when things are down, pretty much everything is down. The only thing that hasn't quite gone along with that is metals. Gold still decided to go down yesterday in spite of a 2% rally in every sector involved, and is actually fading the downward move a little bit today. So outside of gold and silver, I think it's and energy, I think it's pretty much a liquidity game right now. And what we will need probably to get us any kind of sustained upside is enough optimism, whether, again, that's war ending, interest rate lowering, taking more of a probability than hikes again, whatever combination, the credit stress kind of fading away into the background and getting healthier, whatever that combination is, I think it's going to take institutional confidence to put money back into the market before we can, really get anything sustained. I think we'll have some spikes between now and then, even if it's net negative, but to get us any kind of sustained move to the upside, I think it's just a pure liquidity. Is there enough optimism to start buying? Because it seems like so far they really haven't bought the dip. There wasn't like, oh, hey, we corrected 5%. Let's jump in. We really only got an upswing on the headline driven upswing. So that's kind of my expectation right now. Trade volatility and see what happens.
When you started, I didn't want to interrupt you, but going back to like the first thing you said, where you said like we're kind of closer on the line with the danger zone, like danger of what? Of it becoming bearish? Or
yeah, well, I think so. I think that idea that March 20th is the bottom is something I could believe in. Like I could totally buy that story, that we might not go straight up. We might chop. It might get a little, it might not be perfect. It might go up to 675 or 680 even. I think that was Jeffrey's number, and then kind of come back down. But we found a low when we got there, and that will be defended. So I could believe that just based on the rotation that we had, and then, a true kind of correction following from that. But with this gap down, that puts us close enough that, this week could easily start breaking down. And I think if it's not the low and we kind of get to a max pain point below that number in the low 640s, then it opens up like a 10% correction. So to me, that's an important number, is just, okay, did we set the low and, we're going to grind sideways, slightly up and then down, whatever different way, but we're kind of defended above that, or was that leg one, we have a little dead cat, a little headline driven thing, and then we're going lower. But I guess we'll find out Graham's prediction here shortly. Graham, are we bold enough to make a prediction this week?
I'm bold enough to about ready to just book a vacation and check back on the stock market in a month. Is about where I'm at right now. Let me take the screen.
I don't know if I'd call that bold.
It is. It's you're right.
Sheepish.
It's running for the hills.
Yeah. I
took the last 3-4 days of my trading has been absolutely terrible. I had an awesome start to the year. I was up 15-20% roughly year to date, like $35,000 in my 200K retirement account on Wednesday last week. I have coughed up 30 of that in the last 3-4 days. So I should have listened to my own prediction, Nate. Last week I said, hey, in between, or unless we get outside these zones, I'm not making a play. But I had to have some fun, and I think I lost every single one of them.
Yeah, well, I think we've all been there.
Yeah.
That's why I've tried to, as much as I can, even when I do kind of want to take stabs right now, take them more on the basis of volatility itself versus directional. I mean, I still have obviously some mechanical stuff that's directional with overnight options and so on. But as far as just the discretionary side, I've tried to, build some of those credit-based trades or condors or whatever, and take advantage of the range we have versus getting too directional, because I really think we have tons of momentum potential in both directions. And that's just a, tough place to be if you get on the wrong side of it for even one intraday move.
Yeah. With that said, there are some good setups. We'll talk through them today, but Walmart
Oh,
as a
Walmart looks
potential
beautiful.
buying the dip opportunity. Caterpillar, which has been a mammoth this year, looks pretty good here on the dip. Even TSM, which tech has been terrible. Nvidia has been less than impressive. AMD obviously plummeted on earnings. TSM still is in a beautiful bullish trend, bouncing off the 100-day moving average. A couple other names we'll talk about today. But broadly speaking, yeah, the S&P, and I'll show you guys what happened last week. S&P under 200-day moving average. I told you guys last week, I was good with the futures. This is what I told you guys last week is if we get a break and close below 200-day, which we did on Friday, my guess, my bet, we're gonna have highs and lows here, but my next line of support is here at 6,200. So in my opinion, we still have some room to drop. That's about 5% to that downside. Actually, a little bit more than that now to the downside. I'll show you why here in just a moment. But of course, that's just technically speaking, based on previous buying levels. But of course, I posted this. Let me see this. I posted this in Telegram this morning. This will give you a little bit of a clue based on how accurate my prediction is going to be. Oh man, it went a little big. Here we go. Thought this was funny. Donald Trump with his newly signed bill here. Your technical analysis is no match against my tweets. So I'm trying to have some fun here. But again, even yesterday, Nate, I was short in the market because I told you guys, I said, hey, break below 200-day, close below 200-day. We should be in a little bit of a free fall zone. Monday morning, 7 a.m., we were down 1%. I was pumped. The futures were down. Looked like I was going to have a big old payday. And then Donnie J. Trump, the man, the myth, the legend, came out with a big old tweet that him and Iran are best of friends now. Markets flipped 3.5% in 30 seconds. And I lost lots of money. I'll show you guys more about that today. But
We just mentioned how
what's up?
impressive the branding of Twitter is that we still call it a tweet, even though Twitter's
I know.
not even Twitter and he's not even on what used to be Twitter. He's on True Social, and yet we still call it a tweet. It's
I
impressive.
think Elon's a brilliant guy, but
Right.
you're not going to call it an X. I X'd. I posted
Right.
an X. Like, what do you say?
It's supposed to be post, but yeah, he messed up that one for sure.
Yeah, that's a big time. Tweet, that's kind of cool. It's like, tweet, I said something. Anyways,
How was that?
tweet. This is kind of where we are right now. And this is why I didn't give a prediction last week. I'm going to have a hard time doing one this week because it's all dependent on what's going to happen with this US-Iran conflict right now. Did they actually meet? Who knows? Did they actually have talks and that were positive? Who knows? Nobody knows. But it does seem like the US may be wanting to get out of the war or at least scale it down. Or at the very least, Donald is trying to bring oil prices back down to earth for us Americans who are about to be voting for midterm elections here very soon and probably don't want a sour taste in our mouth. So that's a little bit of fun for where we are now. So technically speaking, I'll show you guys today. I think we have downside pressure to get to 6,200. But as you guys saw yesterday, one tweet, one news line can change everything. And actually, there's a massive amount of shorts out there too. So a little bit of bullish news could spark a massive rally. All right, Telegram of the week. Normally I show you guys awesome stuff. This one it's awesome to make learning to have some learning, I guess. Telegram of the week. I posted this yesterday. I had that trade short the Nasdaq. I had S triple Qs over the weekend betting on a drop. By 7 a.m. it was looking amazing. I was gonna be high-fiving everyone at the market open, and then Trump had his post. Within minutes, my position went from up $3,000 to down $7,000, which was a nice. That's a $10,000 flip right there. To see that, in a matter of seconds was kind of scary. Now my rules I have say, hey, no matter what happens, I'm entering at the close. I'm selling at the market open. However, I decided, oh man, this popped. It could keep going. Let me go ahead and close it now. So I closed it, booked my loss for a $7,000 loss. If you guys followed along yesterday, the markets ended up coming down about 1% from there. So I would have saved about, I don't know, $3,000 on that one alone. But don't worry, we're not done. We're not done. Iran came out and said, hey, this is fake news. We never met. Donald Trump is just manipulating the markets. Could be true, could be false. Who knows? Markets faded it. So I said, oh, shoot, I got to get back in my S triple Qs here. Bought back in. And then the market's reversed from there. Lost another $3,000. So my point I'm trying to make here is not that if I stuck to my rules, I would have been guaranteed a winner. Guaranteed winners don't happen. I take winners, I take losers. The point I'm trying to make here is if I stuck to my rules, I probably would have lost 3 grand over the weekend. Instead, because I decided to jump in and change up my rules last minute off the hot news press, I ended up losing 3 times that much. So there's my screenshot there. P&L on the day, lost $10,000. I think that may be the single biggest loss of my year so far on a single trade. Should have been about $3,000 to $4,000. Really, really threw my rules out the window, and it cost me. And it's funny, even though I've been doing this for over a decade now, sometimes you still need this fresh reminder that, hey, don't be a dummy. Stick to your rules, stick to your plan. It'll work out better. So here's hopefully a chance for you guys to learn from my mistake over the weekend. Believe it or not, I can make mistakes.
We believe it, Graham.
Yeah, we all do. Everybody who works with me knows it. They don't have nothing to believe. It's just a known fact. All right, telegram of the week for you guys. I've let you guys know on Friday, clean flush of that 200-day moving average. As we discussed, I drew that little line here. It's kind of hard to see. 6,200 is our next line of technical support. Same line that's right here on the futures market, 6,200. It's going to be the same thing on SPX, 6,200. So we still have a ways to go until then. Again, on Telegram, I let you know on Friday. Of course, who knows what's going to happen. News is driving everything right now. All right, here's maybe the most depressing update of all. Week after week after week, we've been bragging about how the gold trade has been crushing, which it had been. It might have been 19-0. I think I made a mistake here. Let me look at last week's. Because I swear when we did the class, I said 19-0. Oh no, 18-0. All right. 18-1. We took our first loser last week. Since then, gold is looking like a man parachuting from an airplane. Falling through the 50-day, falling through the 100-day. It's now between the 100 and 200-day moving average. Not really where we want gold to be. Not super pretty here. And it's got every single one of my gold trades are down pretty bad, almost at a max loss right now. Now they still have some time, so it's not, the cows haven't come home yet, but right now, where we stand right now, I'm actually flat on the gold income trade over the last 3 months or so, whatever that is, 4 months, 4.5 months. So after being up, I've got 7,000 in profit booked. It was 9,000, took a $2,000 loss last week, so 7,000 booked. Currently open, about 7,000 down. So we're about flat after all that work.
How far do your dates go out on the ones that are open?
Let's go look till April 24th.
Yeah.
Okay, so you definitely have some time for the open P&L to turn.
Oh, yeah, definitely. And some of those are pretty tight. Some of them are buried completely. I mean, we had strikes in the 450s range, but a lot of them are in the 420s range.
Yeah, I think 420s is very reasonable personally.
I think so too.
I'm not betting the farm on that by any stretch, but I think it's a very reasonable level even within the next month.
Yeah, either way, it's not looking pretty right now. I'm going to keep doing it. I think right now is a good time to be more aggressive than usual as far as our strike selection. Not saying throw your whole house on it when I say aggressive. I'm saying we can be a little more aggressive with the strikes. We also have cool things like, let me just pull this over. I saw this morning on Twitter. I mean X. Gold ETF down 9 days in a row. We talk about fade trading. So gold ETF 9 days in a row. It has never gone down 10 days in a row before. This was posted yesterday or 4 hours ago. So if today finishes red, which currently is 0.19% red, it's going to be a world record for GLD. Regardless, let's look at this. Let me blow this up a little bit more. I didn't get to put this in the deck because I just found it. This is something that gets me excited is if we look at gold at these oversold levels 9 days in a row. I'm not going to look at this here. Let's look at 3 weeks later. Average is 3% higher, 75% win rate. 1 month later, and again, we got a couple expirations about 1 month out. 5% average move higher, 100% win rate.
Dude, I'm gonna buy gold in 3 weeks. That jump from 3 weeks to 1 month is insane.
Yeah, that is true. It's a good point. Didn't even think about that.
Across the
But
board, that jump is pretty awesome. The last one there, October 5th, not as good, but
yeah, so I'm thinking someone asked maybe put short term. I'm actually thinking the opposite. I'm thinking today's probably a pretty good day to go long about a month out on gold options. I would probably even use a wrap order with the debit spread. We've been doing credits this whole time, or even go one strike or two strikes out of the money. Let me know in the chat if you guys want to do this. This would just be kind of a bonus position, more speculative play. I would probably take the least or the lowest number here, 3% a month out. Say, all right, let's see if gold can rebound after this insane oversold level, at least 3% over the next month. See what it pays.
I don't think you guys have ever said, tell me if you guys want to take this trade and not gotten yeses.
I know we're
We
traders. It's
always
what, well, all of us here.
people want to
We-
trade, man. People want
everyone
to
likes
trade.
the action.
People want to trade, yeah.
You're
Yeah,
looking
here's
like
another
$10
one.
out of the money, Graham, on that.
What's that?
You're talking like doing something $10 out of the money and seeing what it would pay, or are you talking about doing a wrap?
Like 10, like 3%. Yeah. $10 roughly. Wow. What am I doing? Here we go.
Even $12 out of the money.
Yeah, about 12. Gold RSI hasn't been this low since what? Probably December, some October 2023. That's right here. Nice
Yeah.
little beautiful trend after that. So I believe the reason gold is getting hit so hard right now, personally, is because we've had a complete flip on interest rate decisions. If you guys look at interest rate cut cycles, that's what we talked about, why gold was the number one win-win asset of 2026. Well, it was because every time there's interest rate cut cycles, gold goes crazy for multiple years. That has just flipped. As I showed you guys last week, there's now better odds for a rate hike than a rate cut by June. Now, I think a lot of that has to do with this war that's going on. So we'll see how that shakes out. But I think that I personally believe that's why gold has fallen off a cliff, is because of a short-term overreaction to interest rates. So a lot of yeses. We'll go ahead and pull that up now and take a look at gold. I'm going to go 3% out of the money. So 3 times 400, that's 12. We're going to add 12 to 404. This gets us to 416. And we're going to go a month out. Let's go take a look at what we got. 416. So I'm going to look to buy the 415, sell the 416, see what it's trading at. That is insane. Why are the gold I might have to go to a monthlies. The liquidity is so bad. Look at this. Why is there zero open interest?
I think it's just the weeklies. The monthlies I just looked at had some.
All right, let's go look. That gives us 3 weeks. There's still no open interest. That's crazy.
I wonder if they just printed the singles because of the 405, 410s, 415s.
Yeah, they probably
have
did
the
just
interest.
print them. That's not even that good either.
Yeah, wow. You like to make 300% on that.
Go a little lotto style. Still not that great.
Hmm.
$420 is definitely within reach, though. Yeah, 159%. Oof. Huh. Yeah, they probably did just print the single strikes. They probably said, we won't need these. Oh, wait. Now we do.
Yeah, now we do.
All right. Well, if you guys want to go a month out, pays 159% roughly speaking here. I'm going to go 5 wide just because that's where there's any sort of volume for 1 month hold time. Let me look at these. Yeah, I'm just going to stick with this. Is going to be about that 3 to 4% move here. You can go in the money, Joanne. Like I said, I'm just going to go a little bit out of the money, a little bit more aggressive on the strikes, knowing that there's typically a bounce back period when we get this oversold. Now I'm gonna set a net debit at $2. I'm gonna put in 5 contracts, risking $1,000 to have a shot to make 1,500. So 150% return on investment here. If gold bounces about 3.5% over the next month, it filled right away. So you guys can probably get cheaper. I should have done what Alex says. Alex says always try and go lower because sometimes they'll fill weirdly low. Let's see if 195 will go. So it's probably 195 to $2 range there. David, do you need me to type that up?
Negative.
Oh, you got it right there. Again, this is playing off that chart I just showed you. Let me go ahead and add it here so you guys can have it. If you have the opening playbook $1 membership, I'm just going to copy and paste this over.
Sharon, I think they meant that those strike prices were just showing up in the platform, but they weren't actually being traded.
Um,
Is that what
oh,
you meant by those?
Sharon, yeah, it means that they probably did not exist until just the other day because the market makers probably didn't have to list gold options because at that point they were 5-10% in the money. Nobody, I mean, there's not a lot of people that are going to be trading 10% in the money. There are some people, but so that's why they probably had the 5 wide strikes because they were so deep in the money, but now they are at the money. They're actually out of the money now, so now they have to add in those dollar strikes because they want to get more demand coming in.
Jeff said the 405 410 for a closer date is paying 300%. It's closer date but lower strikes.
And if so, Jeff, you should jump on that. Mine's showing 250 for that. Okay. Let me go ahead and see if let me see if the lotto board it takes.
Yeah, that's 100%.
See if the lotto board can find us something good. Can't remember if I added GLD in there or not. So that trade I just took, though, just to give you guys an idea, if you're going to hold till expiration, we have till the 24th for gold to get above my crosshairs here. Not a crazy strong, not a crazy bet, just a small rebound on gold. Of course, if we get above that line, next week, you can take profit. You can do whatever you want with it. And gold is now positive. Look at that. Positive on the day. Like we said, according to the data, it's never fallen 10 days in a row. So today's the 10th day to actually just flip positive. Markets are still down 0.5% though. All righty. We'll keep on rocking and rolling. Morning market update again. You guys know this by now. Markets are down. Man, they're having a hard time. They're up, down, up, down, up, down. We've been grinding lower and lower really since February. It's not been pretty. It's probably been the most miserable trading environment in a long time. Just to give you guys an idea, we are currently sitting at the September price levels. So if you've been trading with us since September, that means 6 months where the S&P has gone nowhere. Up, down, completely flat. No net return. Here, I keep yelling at my wife. I said, "Man, why is our account not growing? You must be spending money." She says, "No, Graham. Markets have gone nowhere." So no, okay, I'm letting you off the hook. I'm just joking, of course. But tough time out there. Not so fun. We don't have that money, that big of economic news this week. Nothing really to look at. Next week, pretty standard reports. Nothing crazy. Everybody cares about this war in Iran. What's going to happen? What's going on with oil? Is this going to escalate? Is it going to de-escalate? Is China going to get involved? Is Europe going to get involved? Nobody really knows. A lot of uncertainty right now. Oh, let's look at this. All right. If you have the lotto board, by the way, I just saw this pop up. If you have the lotto board VIP, you can just search GLD. It's got a few good selections today.
Nice.
Look at that, June 18th. At a 4% move, 140%. That's pretty awesome. These are a little bit longer out.
Yeah.
Wow, that's downside. If you guys want to play downside, if you have a lot of board VIP, 2% move to the downside pays 370%. This is kind of more in line with what we did. This gives us this one is a little more time.
I did a very similar trade on gold to the downside for this month. I just figured it was a tiny risk, huge
Oh,
ROI on that.
nice.
Yeah.
A lot of man, David.
Nah.
All right, let's take a look at the charts of the week, see if we can get any sort of data on where we are, what could happen next. Well, this is actually encouraging to me. I don't know if you guys remember, what day did we go into the war? Oh, 24 days into the war. I think it was the 28th of February, the Iran attack started. I showed you guys, some people said, well, the markets typically don't care about war, they go higher. That's true over a 12-month period. But over 1 month here, 1 month period, 46% of the time we go higher, which means more often than not, we're going lower. That's why I told you guys I think we're going lower. I don't like those odds. It's below average odds. Not pretty, not very good. However, I zoomed in here. If you look at the 3 months, 3 months odds, so we're almost 1 month in. This essentially happened. It was worse than we see here. But over the next 3 months since the war starts, the S&P actually goes up 66.7% of the time. So 2/3 of the time it goes higher. On average, 0.8% return, median 2.7%. Those are some pretty good numbers. So here we are almost 1 day in or 1 month into the war, which means we have 2 months for this to 2 months left for this to happen. I think that looks like a pretty good overall opportunity here, knowing that from the start of the war till the next 90 days, typically we go higher. Well, in our case, we've gone lower. Let's see, 28. We've gone lower. So in my opinion, could be a nice little pivotal turning around point, potentially speaking. Now that data there would indicate that the S&P 500 would be by, let me add 2 months, 1, 2, by May 24th, somewhere in this range, which really isn't all that out of the picture, not that totally unreasonable. So again, it does not mean it's guaranteed to happen, but it does mean, hey, we did get that 1 month flush that we expected. We know historically speaking, over 3 months, it's positive. This could be a great opportunity to buy at a discount versus waiting till it's up here to then get in. Just some food for thought. We'll keep on rolling here. If we look at the 1 year average, this is where most people say, well, wars aren't that bearish. Well, yeah, that's true because if we look at it over a 1 year term, they tend to be fine. The market shrug it off. In the short term, not so good. Long term averages a very normal, actually better than normal year, 14.2%. Does this make sense? I know that there are a lot of different time frames out there. Does this make sense?
Yeah,
What
I
I'm
think
looking
so.
at here?
Yeah.
All right, cool. All right, keep on rolling here. This was a fun, interesting chart that I found. The traveling trader posted it. He X'd it. He didn't tweet it. He X'd it. Since Liberation Day, every red S&P candle that produced at least 110 million in volume saw a local bottom in multi-day bounce. So this guy went ahead. It could be cherry picking. I don't know. I never have matched this up before. But he said every time we had a red candle with at least 110 million in volume, what happened next? This was the bottom of Liberation Day, went higher. This one was July, that quick flash we saw over the weekend in July went higher. Big dump there, went higher. Each of these had over 110 million. So he said, hey, on Friday, we just had that happen. Had 123 million. Could be a local bottom for us. We'll see. We're 2 days in. So far, we're up from this analysis. But we'll see what happens next. On the other side, Daily Chart Book found that the bull bear spread is weakening. And typically when that happens, markets tend to drop, so according to them. I don't know if I believe it, but I want to give you guys both sides of the coin here. Here's why I don't necessarily believe it. Is because they love everybody who does bearish charts, because trading to the downside is so hard. Everyone who loves to do bearish charts just highlights the worst periods and says, look, it dipped. Look, it dipped. But they didn't highlight this one, right? Let me make this pretty drawing for you. They didn't highlight this one. What did we do? We went higher. They didn't highlight. I mean, that almost got there. This one went higher. They didn't highlight this one. We still went 2 months higher. They didn't highlight this one. Went 2 years higher. Missed this one. 6 months higher. So again, take with it what you will. In my opinion, this is more like the fear and greed index, a short-term indicator of how people are feeling on sentiment.
Sharon asked what you meant by local a minute ago.
Local it just means short term. This guy didn't define it by how many days that means, but it just means a short term bottom. Here is a fun fact for you guys on why this investment research firm believes that the S&P 500 bottom may be in and we should rip from here. Short ETF volume has hit the highest level ever. Now, keep in mind, every year that goes by, we are going to see the highest level ever because money supply increases, therefore trading volume increases, therefore it's always going to be bigger and bigger and bigger each and every year. But it is important to know, highest short volume ever on ETFs. And this person's case is that, hey, if things start to flip positive, we very realistically could see a massive short squeeze on the markets, which is kind of crazy to think about. The S&P 500 can now short squeeze, but it can. We've seen the stuff about the zero DTE volume and gamma and how that can affect it too. So this trader says, hey, we got way too many shorts on here. If things start to flip, it could flip fast. So ultimately, I'm going to give you guys a very bland prediction again this week. Ultimately, between this, the 3-month chart compared to 1 month, and this, I think there could be more downside. I believe 6,200 is the next level of support. I believe if Trump ends the war tomorrow, we will not see 6,200. We're going to see all-time highs. So it's a very much a coin flip environment right now. However, I am leaning towards the fact that, hey, we're probably going to look back 6 months from now and say that was a great buying opportunity. Whether it goes a little bit lower from here or not, we're going to say that was a great buying opportunity. That's kind of where my head's at right now. For earnings, a lot of names this week, nothing too big. Ondas is tomorrow before the open. They've been a fun name to trade, but there's nothing too big that has my eye this week. A lot of names, a lot of smaller names, more speculative plays, nothing to really chat about there. Let me see. How's Lotto doing in this environment?
Parity.
It's been tough. I think all of my swing trading stuff has been tough. Outside, 60 Minutes been killing it. We took a
Yeah, but
loss yesterday.
the 5 trades we closed in March so far were great.
Yeah, we do have some losers open right now. It's tough, Mark, because we'll be up 1% one day, down 1% the next day. So it's not as easy as a bullish environment, but overall, to David's point, overall the numbers have been insanely good. Last class, this is why I told you guys, we're seasonally bullish, momentum is weak, and credit risks were rising. So it was too cluttered to easily pick a direction. So I said, let's let the price action do the talking. We'll be patient. If we close above the 100-day, we're going to buy the breakout. If we close below the 200-day, we're looking for that 6,200 level. What came next? We closed below Friday breakdown on the 200-day moving average. I said, hey, next level of support is 6,200. And then Monday, Trump came out and made his tweet. And we went right back above the 200-day moving average. However, if you guys look, I hope you're paying attention to this. Nothing fancy about it, but if you look, while we did have that crazy pop yesterday, that again led to my insane decision making that lost me a lot of money, we ended up finishing still below the 200-day moving average. Do you see that? So this blue line, 200-day moving average, we still closed below it. Again, this is a simple indicator, nothing too fancy about it, but it is just interesting to note that the strength did fade, and now we are back down below it. So, question is, where do we go from here? We are in extreme fear mode right now, which can be a great time to buy. Again, that's one of the reasons why I say 6 months from now, we'll probably be looking back and say, man, that was an awesome buying opportunity. Even if we go 5% lower, like I think we may, we are starting to get to a point where it's, hey, this is the time we should start licking our chops. Put to call ratio, we've seen this bounce above 1 multiple times, which again, we have seen quick pops from, but we haven't seen the markets gain its footing yet. So we're seeing these short overextensions of the call put ratio, but not enough to really gain ground in the markets. Now, the credit risk that we looked at a week ago, we said, oh man, this is getting really close to that 1 number. It was at 0.94. It's come back down a bit, so a quick breather for now, which is good. This means lending is getting a more looser or safer. So when that gets above 1, we kind of go into, oh man, we can see a bigger drop here. We've pulled away from that range for now. For market breadth, week over week, we've gone nowhere fast. We went from 32% last week to 30% this week. Not where we want to be. Interesting note, sorry, this was not the chart I was going to show you for this, but the Nasdaq stocks, the big stocks, have been in a terrible downwards market for much longer than the S&P has, which has me not so excited, especially when market breadth is now market wide, well below our 50% number, down in the 30%. Percentage of stocks above 200-day moving average, not much prettier. We're below 50%, which means the majority of stocks are in not necessarily technical bear market, but sort of a bear pattern, a downwards trend. Not really where we want to be. Seasonally speaking, we're supposed to be bullish right now. Presidential cycle is bullish. Fed cycle is bullish. Seasonal cycle is bullish. We haven't seen it yet. We haven't seen the bullishness yet. So, again, upcoming prediction. Here's the newest recap. Seasonally, we're bullish. We're supposed to be bullish. We do not have directional momentum. Let me pull up Newton, which it doesn't turn green on the S&P. It's not meant for a broad index indicator, but it doesn't necessarily turn green very often, except for like look at this dip buying in the April green. That's pretty hot right there. Normally we're like yellow greenish environment, maybe a little bit of red. We have been just sinking in red since January. We're not seeing any bullish momentum. It's actually negative momentum. Pretty ugly here on the charts. And just to be frank with you guys, all of the price action right now is news based. Everybody only cares right now. They couldn't care less, honestly, about what Apple has to say on their meetup in 2 weeks. I'm sure that Apple will probably move on it, but right now, broadly speaking, everybody cares what's going to happen with oil, what's going on with the war with the U.S. Iran. Will the Strait open again? Is there going to be peace or is there going to be escalation? So it's really too hard to make a technical approach. Again, I'm still telling you guys this. Technically speaking, technically speaking, 6,200 is our next level. One simple peace deal with the war is going to completely negate this, and we're probably going to go to all-time highs. If you want to wait until we're above the 100-day, and I put the 50-day in there now because at this point they're basically touching each other. A break and close above there would be technically bullish for a move to all-time highs and beyond that. So until then, right now, guys, it's just a coin flip on Trump and Iran. Nate's playing it for volatility. I'm actually telling myself I'm just gonna not play it anymore. I've not been having the best of luck with my trading. I've obviously broken some of my rules, but I think at this point it's just like, hey, I just gotta wait and see. I can't control what the news is gonna be. So I'm going to trade the short-term stuff. 60-minute is crushing it. The intraday stuff, the overnight stuff, like Alex's overnight Night Riders thing has been a blast. I'm going to keep doing that stuff. But as far as the longer-term swing trading stuff, I'm just going to lighten my position load. With that said, I know there was questions about things like Lotto Board. That is going to be very, very good when we do get directionally settled. And also, that is also very good for short-term plays. For example, you may have a position, and I've seen this firsthand, a position, we had TSM, it popped over 100% in like 2 days. I didn't take the profits because it had like a 400% potential. I wish I would have, knowing this choppy environment. Now, I ended up losing it, but things like that are going to be very good for the short-term pops. So if you have things like Lotto Board, recommend take profits much quicker than usual right now. Yeah, Tom, that's kind of where I'm at right now. I'm still trading my normal size for 60-minute. But I'm not like, for example, if we get a touch to 6,200, I am going to go crazy long on Lotto Board. That's our dream portfolio type setup where we can see some amazing, amazing returns. Right now, I'm trying to keep my powder dry and be far more selective than usual. I see people saying they're losing on longs. Guys, this is what the S&P looks like. I mean, if you expect to be winning on longs here, that's swimming against the tide. I've been trying to focus on actually adding in shorts from the Lotto Board alerts. We had a couple winners on puts, just because technically my technical approach is 6,200, so we got to keep trading to the downside. So if you keep taking long and you see the market keep falling and you're losing, you can't really be too surprised by that. That's how it works. And
Also,
same for
I think
someone
part
said
of
the
part of
wave
being
trader, same
cautious.
thing on longs. What's that?
No, I was just gonna say, another aspect of being cautious is not taking all your trades on the same day. You got to spread it out
True.
over time because you have something like a Trump tweet affects the market. If all your trades are all on the same day, you're not diversifying by time. So you need to make sure you spread your trades out also.
Yeah, that's a great point. And yeah, across days, across sectors, and directionally right now. Or just keep your powder dry. All right. Sectors, same thing week over week. This is supposed to be an amazing time for our sectors. Our sectors have been holding up for the most part, but again, markets are falling. People, Wall Street isn't loving the news right now. We'll see where we're at right now. Last class, here was our sectors we liked. Told you technology was my wild card. I'm starting to like tech a lot just because it's at a discount, not necessarily because it's relatively strong or anything. Week over week, we did see tech move up 2 spots. Healthcare fell like crazy. Now this is all kind of interesting. So this ranking here is based off the 1 month, 3 month, and 6 month average for each sector. So you can see energy is positive, positive, positive. Obviously, you start a war with Iran, energy is going to go up. Just how that works. However, look at this. I thought this was interesting. IWM moved up 4 slots from last week. 4 slots positive, which this is like our power rankings. They're just competitive to each other. IWM is actually down over the last month. So it's down 5.5%, but it's moving higher. That's how weak, that should give you an idea of how weak this market is right now. When you have this isn't a sector, it's an index in this case, but small caps moving up 4 spots on a drop, that just means that these other sectors are dropping even harder. It's like healthcare, 7.9%, 1 month drop. Now we are seeing some strength again, come back in technology, which I like. I think we're going to be loving this 6 months from now if you buy some of these discounts, because I do not think this tech run is done. Right now, it's painful. We got to be patient. Top sectors right here. These are the ones I'm working with. But again, I'm trading pretty much light across the board outside of my very, very short-term stuff, 60-minute. Again, if you are going to take lotto board trades, they can be awesome. But just look to take profits a lot quicker than usual. Until we get a true, clean directional market, which we don't have right now. We have a news-based market. You're going to want to take profits on that volatility, which can be very efficient and effective if done correctly. So these are the sectors I like right now. Let's go ahead and look at some trade opportunities. Again, last couple of weeks, I have been very, very adamant that I'm not going to force things. I'm going to stick with that because, again, I would much rather wait for a very clear and obvious buying opportunity than just try to force trades right now. Sometimes having no trade is a position to make. Let's look at the Apex. No new signals here again, which is fine. Again, I don't want to force a trade. Costco is an active signal. Could be a good opportunity if you have Apex. Again, I'm just not going to take one unless it's a new signal and then also in a beautiful pattern. We saw, I think, was Progressive an entry the other week? Yeah, Progressive was an entry the other week. And I told you guys, I am not taking this. Yes, it's a technical entry, but it's in a downtrend. It's below its moving averages. Financials are the weakest sector. I am not going to take this trade, even though it is an entry. Look what it's done since then. If I can zoom in, here we go. Here was our entry up here, 215. It's now down at 205. So this is what I mean when I say, hey, sometimes sitting on your hands is the best thing to do. It's much better to be sitting here thinking, man, my account's looking kind of boring because I haven't taken a trade in a while, than to come and see your account down $1,000 because you forced one. I encourage you guys, however, to continually keep your head in the game because we are going to, at any given day, we are going to have a turning point where things are going to get very, very exciting for us again. So keep your head in the game, keep showing up, even if you're not taking a ton of trades right now. Right now, I turned on our seasonal calendar for March. I turned on our momentum filters to show positive momentum stocks. Not a single one on here because most stocks are terrible right now. Gold miner NEM is showing as a bullish seasonal one right now. And UL, never traded this one. Not a pretty chart. I think I have too many gold positions open right now where I'm not going to add this one in. But if you guys want NEM, I think this has popped up a few times this month. Let me see if I can zoom out here. Get a screenshot of this. NEM is the #1 best signal today. Let me tell you guys the details on it. 13-day hold time, it averages a 9% return. So if you like the thought of a gold bounce back, like I showed you, do you need me to leave this up, David?
I thought you were going to copy paste it, but I can.
Oh, yeah, I can do that. Yep. I'll copy and paste it. Where'd my chat go? Average 9% return. Okay, here we go. Let's go back. Oh,
Is
this
that
should
Apex?
just- Sorry. There we go. Let me do this. No new entry. All right. If you guys like this, if you like the thought, hey, right now we are very, very oversold in gold. From a technical standpoint, bounces back over the next month 100% of the time. I like that. I like to move higher. Well, NIM is going to ideally probably bounce back a little bit more than gold. It's a gold miner. It's going to be a little bit more volatile, a little more alpha than GLD itself. So if you like this and you want to add on another gold position, NIM is a great way to go. It's also a seasonal bullish pick. It means it's gone up every year for the last 10 years during this window. All right, let's go ahead and look at. Yeah, Jeff, I think we do have NIM open from a few weeks back, which obviously with the gold drop, not so pretty. Whew. All right. For Newton, let me go ahead and open up the charts. Has anyone taken the Newton trade when I give you the watch list? Just curious. Because I just give you a watch list here to trade on your own. I'm just curious if anyone's been taking them. Oh, SLB. Wow. Got energy stocks. Energy is the strongest sector. I'm going to add SLB to the chart. Ooh. Another energy. AT&T? Really?
One no, one yes, one occasionally.
I like that. Fix was last week, right? I think we had Fix last week. Look at this. Market got drilled. This one's flat. I mean, maybe up a little bit since last Tuesday. Just shows you how strong
Yeah,
that
we
was.
had fix on the long list last week.
I'm gonna add it back on this week. So we got SLB. These are the long stocks I like right now. 2 energies, 1 industrial. Delta Airlines, positive, but I'm not loving it right now. I think between the TSA lines and the wars, it's not too.
I like their post this morning. Did you see
I
it?
know.
Or
Yeah.
did you post it? I think you posted it.
I'm so sick of Congress and the government. It's not even funny. I think our government, and I don't want to get too political, but it seems like it's gone from the #1 role of the government is to take care of the people and do what's best for them to the #1 role of the government is to do what's best for themselves. So I'm pretty sick and tired of this government. I saw Delta decided they're not going to give Congress VIP service.
Yeah.
They're
They're
going to be
no
like
longer
everybody
until
else.
the TSA starts getting paid. They're not going to give Congress any priority service.
Yeah, Republican or Democrat. I'm pretty sick of this government. I know Trump's original mantra was to drain the swamp. I think we need to drain a little bit of both sides of the swamp right now. I don't know if you guys saw the person 14 minutes before Trump announced his tweet yesterday.
$1.5 billion.
Yeah, someone put $1.5 billion long the S&P 500, and they also sold $190 million of oil.
Oh, I
What
didn't see
magical
that half.
timing! We got
Yeah.
a big old swamp on our hands
They
on
must be
both
really
sides. Both
lucky.
sides.
They must be just really lucky.
Yeah, and the fact that we can't get a budget through to fund salaries for people we need, TSA, we absolutely need TSA. Meanwhile, Congress has no problem taking paychecks from Big Pharma to push bills through. It really gets me angry. So we're not going to spend too much time on that. But Delta, appreciate Delta taking a stand. They'll probably have a CEO go missing here soon, but whatever.
Jesus.
All right. Long watch list. We like energy stock, LSB, TRGP, and fixes industrial. Industrials have been good. That stock is just a beautiful stock. Let's go ahead and look at the short side. We'll probably have a bunch on the short side. Oh, not too many. Oh, Uber's back up. Man, this is a nice one. Man, we missed a gap fill here. Uber popped on news. I think it was with Nvidia last week. This is a technical gap fill to the downside pattern hit in 3 days. Oh, that's a pretty one.
SPY just closed the gap for about a minute and then came back down.
Oh, did it really? I think we're long. Let's see. We're long 60 minutes. Let's see. Wonder if we hit. Oh man, I gotta make this a little bigger. No, we haven't hit yet. Haven't hit yet, but hey, gotta love that. Man, my little Congress tirade got me pretty heated over here. I think my Fitbit's saying their heart's pumping. All right, back to trading here.
Let's go get
Oh.
another haircut to calm down.
Yeah, that's good. ROP. I've never traded this one. This is about as ugly as a stock chart can get. We'll add ROP up there. Uber was on there. I love Uber to the downside. Made money on that twice now in the last couple of months. Again, I personally like trading to the downside a little bit more than the upside right now. What is Fortinet? Is Fortinet communications or tech? Yeah, tech. Pan W to the downside. My favorite one right now is Uber. I mean, this thing's just been a moneymaker to the downside. Look at that. I mean, technical bounce off the 50. Simple moving average. Gap fill. We missed that one. Wish we had that one, but hey, another breakdown here on Uber. Let me add Pan W here, and I'll post it in the chat. Yeah, Congress should not be paid until everyone else gets paid. Agreed. The problem is, I don't think Congress even cares about their salaries anymore. Their salaries are nothing. It's a drop in the bucket for them. They get way, way more money from the back door.
Yeah.
So.
Let me lighten the mood a little bit here and let people know if you're fairly new to Opening Playbook, we start the show about 10-15 minutes early every morning. We do a bit of a walkthrough on what Opening Playbook is about and also about how to use this platform that we use here for the show. So if you want to show up tomorrow about 15 minutes early, you can catch that pre-show. And we also have, and this might appeal to everybody who's here, at the behest of Mr. Brent in the audience here, I made a webinar platform guide just to give you some tips about different things that this platform does that you may or may not be aware of. It's in the announcements, which if you're on a large screen, you can just scroll down below the presentation. You'll see the announcements. It says webinar platform guide. And if you are on any screen, you can click the megaphone or bullhorn icon at the top of the chat to see the announcements, but I will also post it in the chat here. This is the guide that I made for the webinar. You can keep that as a reference.
Awesome. Thank you. And if you guys are new here, I promise I hardly ever talk about the government.
Yeah, we try and stay away from it.
If you guys like Uber to the downside, which I do, and we were talking about Lotto Board, let's look at this. I looked at Lyft. I don't think it's as pretty to the downside. Here's one for Uber. This is a right now the market makers are pricing in a 15% move drop. It's currently on pace to make another 18% drop. This is a longer dated option here, June 18th. Right now I just pulled the live prices, 30 cents. So let me go ahead and copy this over. You can see the max ROI here is insane. Let me put live debit, it's a net debit, 30 cents. The max ROI is now 733%. However, remember, as I said, this is a short-term market. If you take a trade like this and Uber falls another 4% overnight, you may be up 100% on this trade, or maybe up 80%. Look to take profits quick here if you want to trade something like this. Uber's my favorite downside play right now. Let me just have some fun here before we wrap up. SLB, and let's see what we got here. Oh man, look at this. SLB, little wrap order to the upside from the Lotto board. Let me just zoom this out a bit. This is a cool thing of why I like having the VIP version of the Lotto board. It's 80% right now. because it just moved a little bit higher. But this is just a technical wrap order on SLB. If you like Uber short, you'll love Lyft short too. I think so too. I've made good money on Lyft to the downside as well. Let's see what TRGP, if we got anything here.
Did you post SLB?
No, I didn't like because the ROI dropped a little bit.
Oh, okay.
Oh, here we go. This I like. Let's see what happens. I'm going to make sure get live. 213. So here again, this is one 213% payout. Same, I'll look at ADI next. Let me get this. 213% payout. But again, if energy keeps moving higher this week, if we get a little pop here, look to take profits, even if it's 50%. Don't go, you can't go broke taking a profit. This one, I would easily see a move to the highs here at that 250 range. So again, look to take profits quick in this unpredictable environment. Someone said ADI, analog devices.
Wait, never mind.
Oh, sorry, what?
Nope, my bad.
Oh, ADI does look, I mean, that's a beauty of a chart right now.
I'm gonna repost these just so they're all together for everybody.
Nice, Sam. Oh, nice. Senate is near funding. All righty. Go, government, go. Let me, I don't know why this one's taking so long. Let me see a fix. I don't even know if, well, fix has got to be, let me reload this. Oh, nice. Scott, yeah. That one, Uber, at first it popped on the NVIDIA news. A little bit concerning, but it's already right back down. All right, well, these aren't loading right now. I'm not sure why. It may be doing its new scan right now at the same time at 11 o'clock. CVX, I just saw this one here. That was my first play I did on Lotto Board. Oh my goodness, look at that chart. Gee, show Pete's. That's another beautiful chart. The cool thing is the front tab of the Lotto Board should pull stocks that are in a beautiful trend. So even when the markets are less than favorable, it's going to find the ones in an uptrend. Same opposite for the bearish. Bearish picks are going to show ones in a downtrend. There's no way this is. Let's get a live price here. 400%. Look, that's not even that great. App loving to the downside looks really good right now. Oh, might be taking that. All right. With that said, we are going to walk you guys through what the heck I'm even showing you right now, especially if you're new. We're going to show you what the Lotto Board's all about. It's great because you can throw these tickers we talked about today into the Lotto Board. It's going to automatically source options that have a chance to pay outsized returns on a very standard move in that stock. We'll walk you through why that happens, what's going on, and then how to take advantage in a quick moving, highly volatile environment that we've seen right now. The results have been outstanding over the long haul. Again, there's going to be hot periods, cold periods, but overall, just blown me out of the water.
0.9% win rate on home run trades, just insane. 143% is the average return, folks. That's the winners and losers combined over 10 days, with the average winner of 224% and the highest profit factor I have ever seen in my career right now at 10.45 on those real money trades over the last few months. But of course, bound to be winners and losers. This is a tool for traders. It's not a trading service. So of course, your performance is going to vary on how you use the tool. Trade at your own risk. Again, let's just double and triple down here so everyone's on the same page. We have seen this tool produce really big wins, and that's by design. It's looking for those huge 500, even 1,000